Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Okay, traders, this video is being brought to you tonight, Wednesday night, for Thursday's trading, October 29th, 2009. And traders, last video we put before you, we showed you that the grains all had a formation and a reason why that formation was bearish. And the same thing with sugar. I showed you a bunch of charts. That very same night, we ended up short some grains and short sugar. All the grains broke and the sugar broke, hence telling you the fundamentals come out in the charts first, right? The fundamental, as I mentioned in my previous video, the one right before this, was the weather in the grain markets. And I said, well, the analysis is saying that weather's supposed to break. Let's go with the analysis. And that's exactly what happened. Now, every time I get in front of the camera and say, look, the analysis says the fundamental will equal this, isn't always going to be right. But most times the fundamentals come out in the charts first. Now, that brings us to tonight's video. The GDP, the gross domestic product, is going to be released at 8:30 a.m. tomorrow morning on Thursday here in the U.S. And I think it's going to produce this. The GDP reversal setup. That's what I think we've seen this past week. I think it's a setup for the markets to reverse once GDP comes out and shows us that as a whole, the economy is starting to churn a little bit. And I'll show this to you on charts, traders. I got a multitude of charts to show you, so get ready. We got a lot of charts in this video. Again, this is a case that I want to present to you analysts and traders out there, you Omniacs who follow our analysis. The case is that I sense this is a GDP, gross domestic product, reversal setup, which is, so far, we've seen indices back down in the last few days. We've seen the dollar shoot up. We've seen currencies come off, especially in the euro. And I think that is the setup, and all of that reverses if the GDP comes in bullish tomorrow. With no further ado, traders, let me show you the charts and present you my case. Okay, traders, presenting my case. This is the S&P Cash Daily Bar Chart. This is the major parallel channel that we have been in since March, since the lows. We are here, we've hit here, missed it here, and it's kissing it right now. Okay, that doesn't mean that the market is sour or that it's ready to break down. That means it's about to do what it does every time it gets down here, and that is turn around. So that's what I'm hoping to see on this trade for Thursday. When the GDP numbers come out, I think we're going to hold here and go right back up like we've done. Let's look at this. I mean, this entire chart's been going straight up with, of course, pullbacks, right? Pullbacks are part of a market moving higher. Now, traders, if in fact we start to get below this and start to get below these peaks, these last trows, you can call them, if we do happen to get below that, then okay, I don't see why I wouldn't get bearish. Of course I would. For now, though, I'm looking at a chart that starts at the bottom of my screen here, goes all the way up to here, and that is not a bearish market. Now, putting in this larger term parallel channel, the major trend channel that we're in, and seeing that all we've done in this last week was come down and touch it, I am still bullish the market. So this is the beginning of my case for a GDP setup. GDP's coming out. We go down 1, 2, 3, 4. There comes GDP. So I find that interesting. So I start to dig a little deeper. You've seen the S&P Cash chart, right? Now what I'm going to do is I'm going to blow up this portion of the chart here and show you something else that you may find interesting. Again, remember, we haven't broken out of the channel yet, right? Now let's go take a second look at this chart. Same chart, but a closer view. Okay, traders, this is the very same chart, the S&P Cash Daily Bar, but I've sort of zoomed in a little bit on the recent action. Not only are we still inside of this major trend, the parallel trend I showed you, but there's a current parallel channel that we're in, and we've held it every time we've come near it. They both come in at the same area right here. Both the long-term channel and the one that we're in now, and it coincides with the day a huge report will be released that could make or break our market. That I find very, very interesting. So now we're looking at the S&P. I found two channels that tell me we're merely just testing support and should hold. So then I decided, let me go look at the transportation average because, of course, that's the main one. That's the leader. So I pulled the Dow Jones Transportation Average in order to build a case for why we could still be bullish here. And let's go look at that chart. Okay, traders, we are looking at the Dow Jones Transportation Average daily bar chart. Clearly, this is an inverted head and shoulders bottom-looking chart. This is from last year, a year and a half ago, when we started to break, all the way to March, through March till today. This is an inverted head and shoulders. An inverted head and shoulders many times signifies a bottoming market. So you have that, right? Now, if we take a closer look, watch the way this next chart develops behind this one. Okay, traders, very same chart, but now there are some things here that you need to see. Yes, we know the whole thing's a big inverted head and shoulders. Also, a very nice V-shaped bottom. I mean, look at the V-shaped bottom here. Very, very nice all the way through, on the way down and on the way back up. Very, very nice V-shaped bottom, right? So head and shoulders, inverted, bullish signal, very nice V-shaped bottom. Now it starts to get interesting. We just got down to the Omni proprietary moving average today, Wednesday, on the close, the day before GDP. This average works well whenever you're near it. You have major movement. Most times, if you are below it, you do not get back above. You are below now, can't stay, tries it again, can't stay, tries it again, can't stay, then finally gets above, tests it, holds, tests it again and holds, rallies, comes back down, another test. Another reason to think the V bottom, the inverted head and shoulders, now the Omni proprietary moving average, and all of it coming together in the exact same spot. That is interesting. The day before GDP gets released, I am not buying this downside. Here you go, more. What else is on this chart? You see this area of congestion that we had on the way down? We had a lot of bumps. We couldn't just break right through it. We couldn't get above it. Look at where we are right now. We're in the very same area of congestion. And on the way down, finally when it broke, it got below. Now on the way back up, when it finally gets above, we should have a nice rally. So you have a congestion area in the same spot we're in now. You have the Omni proprietary average kissing the close today in the leader, the transportation average. Generally, we stay above the Omni average. You have a V-shaped bottom. You have a lot of reasons why this market overall is bullish and big pullbacks should be purchased. So I think you are beginning to see my case developing here. Traders, we are not done. Let's look at more charts now. Okay, traders, another lesson in what's a bull market, what's a bear market. This is your NASDAQ December daily bar chart. Ever since March, it has been making a series of higher lows, then higher highs. It comes up, it makes a low, rallies up, makes a higher high than the one before, comes down, makes a higher low than the one before, rallies up, makes a higher high than the previous, comes down, makes a higher low than the one before, rallies up, makes a higher high than the previous one, drops back down, hopefully makes a higher low than the previous one. This is a series of higher highs and higher lows. Will this one right here simply just be another higher low before the next higher high comes? I would tend to think so, because that's what markets do that are bullish. They rally up, pull back, but the low is higher than the previous one. Rally up, pull back, low higher than the previous. Rally up, pull back, low higher than the previous. It's a pattern. So if we are in a pattern like that in the NASDAQ, one of the leaders, if we are in what I showed you in the transportation average, which is the V bottom, the inverted head and shoulders, holding the Omni proprietary moving average, that is very bullish long term, not bearish. So I am building a case for tomorrow, Thursday, being the GDP reversal setup. The setup is this quick break, 1, 2, 3 days down, and then the GDP comes out. I don't know, traders, but let's look, because there are also indicators now that are starting to say this market is oversold and is getting ready to turn. I think my case is getting stronger here. Let's look at the indicators. Traders, NASDAQ. This is the commodity channel index, an indicator that we like to use on the NASDAQ. Look at how far down into the oversold area we have gotten. Every time you get down here, the market seems to turn the other way. And look at this little hook right here. You see that little blue dash? it's already starting to show signs that it wants to hook up a little bit. Boom, boom. Let's see if that is a telltale sign that, look, GDP is about to come out and my indicators go oversold and start to hook up. I like that so far. Let's look at another indicator here. Okay, traders, once again, the NASDAQ daily bar, but this is the slow stochastic indicator. Once again, well into the oversold area. In fact, further than it went last time. And when we get down here, you can see that it usually turns and heads back up. So indicators are now pointing towards I am oversold. I'd like to reverse. You've seen that we are in some major parallel channels in the transportation average and in the S&P. And you see that the NASDAQ, one of the leaders, is starting to show that it wants to move higher, plus the series of low, high, higher, low, higher, high, higher, low, higher, high, which is what the NASDAQ has done since March. So another indication that the GDP reversal setup may actually be what we're witnessing. Let's look at another indicator. Okay, traders, we are now looking at the RSI, or Relative Strength Index, another indicator we like to use on the NASDAQ. And look, once again, way oversold, further than usual. Last time we got down here, we had a major rally back out of here. And once again, see that little hook right there? It's starting to point itself back up before GDP comes out. Again, when I see things like this, when chart patterns develop and then indicators come in at the same time when a piece of fundamental news is coming out, that usually tells me the fundamental is coming out in the chart already and it's pointing in a direction. This happens to show me that if we are correct, GDP will be bullish for us tomorrow. Let's look at another chart now, traders. Let's look at an international market and see what it looks like. Okay, traders, once again, we are looking at a series of higher highs and higher lows, and this time it is on the FTSE, the London's FTSE, the Financial Times Stock Exchange. Traders, look at this. A low gets put in, rallies up, puts in a high, drops down, puts in a higher low, rallies up, puts in a higher high than the previous, comes down, puts in a higher low than the previous, runs up, puts in a higher high than the previous high, comes down, puts in a higher low than the previous low, rallies up, puts in a higher high than the previous high, comes down and stops right here. GDP comes out tomorrow. Will this be simply another higher low before the next higher high comes? I would like to think so, because we've been in a solid market lately. Yes, we've had a couple of days down, but look at how many times we did, and that did not stop the market from recovery. So I don't think that we're ready to crash here again. I think we're going to go higher. The FTSE looks just like the NASDAQ with this series of higher lows and higher highs. And now let's look at an indicator on the FTSE. Okay, traders, the FTSE now we are looking at, of course, on a daily chart, we are looking at the Commodity Channel Index, or the CCI on the FTSE. Once again, look what happens when we get as low as this blue line. Usually you've seen your last down day. GDP comes out tomorrow, baby. I don't know what we're getting, but I'm starting to smell a setup here. Now, if you think I'm done, I told you there's going to be a lot of charts in a long video. Now I want to show you a couple of currencies and the dollar, or at least a currency and the dollar, and continue to make my case. Okay, traders, continuing here, stating my case, dollar index daily bar chart. Look at this parallel channel that we have been in, facing down ever since the drop began, okay? We have been going down in the dollar index. That drop began in March, right when the S&P started to move higher. Look at this parallel channel and how many times when the dollar hits it, it runs in the other direction, right? Just about every time. Well, where are we right now, the day before GDP comes out? Bingo, right at the top of the parallel channel. Not only are we seeing some kind of a setup in the indices, right now the dollar index and the currencies have the exact same situation going on. These things do not happen by accident, traders. This is the stars lining up. So what I think I see is the trade will push it down right after we have our GDP go crazy. Everybody who doesn't know what it means and buy it and sell it and the market goes nuts. Then when it calms down, I think dollar starts to head back down, and likely is euro currency and other world currencies start to head right back up. Again, GDP comes out tomorrow morning, and look at where we are right now, butted up against the same line that always knocks the dollar back down. Now, the dollar has indicators, and we're going to rip through a bunch of these indicators very quickly. Let me show you why the dollar now is showing that it looks like it's gone too far on the upside and is getting tired just when the S&P looks like it's gone too far on the downside and it's getting tired. Let's look at the indicators, traders. Okay, traders, I'm going to try to go through these very quickly. This is the slow stochastics wrapped around the dollar index. Once again, GDP comes out tomorrow. For whatever reason, the day before GDP, dollar index stochastic gets into the overbought area, which generally, once we get up here, we start to drop back down. You've seen that every time. Well, here we are. GDP comes out tomorrow. I'll bet that's going to be what happens next time you look at this indicator. I'm going to rip right through these because there's a few. Traders, ready? Here we are now. Dollar index. This is the WADX, the average directional movement indicator, very much like the DMI, and clearly decided to turn itself around as of this afternoon's close and is beginning to point a little lower here. So now you have the green positive that hooked and started to point down. The red hasn't hooked up yet, but it's pointing like this, a little bit sideways. Another indicator saying, hey, wait a minute. I think maybe we're getting ready to do some sort of a trading turn here. That happens the night before GDP, along with stochastics getting a little bit overbought. Let's continue to look here, traders. The next one we have for you is the RSI, or Relative Strength Index. It has gotten even further than it usually gets. And look at the little hook right there. Just that nice little hook that's starting to point us back down. Will it be telltale? Well, I don't know, but I think all of this together is certainly a viable setup to think that GDP will help us go the other way. So dollar index, as you can see with the indicators, are starting to look overbought and want to turn back down. Another indicator here on the dollar index, we are now looking at the commodity channel index. It too has gone up way too far and has a little hook right there. If you look at the top of that little blue line, has a hook pointing down. This is usually the area where it does run into trouble. So I think we have a case for dollars beginning to break. And if dollars begin to break, S&P goes right back up, because that's been the action that we've witnessed for the last 6 or 7 months. If the dollar's moving in one direction, you see the S&P running in an opposite direction. So that is where we are now in the recovery of our market. I believe that when markets do recover, dollars or their world currency goes up. When their market goes up, I think at some point in this recovery, dollars and the S&P will go up together, probably once they start raising interest rates. For now, though, the dollar goes opposite the S&P and seems to be in that mode. So this is a case for dollars to start to go down the night before GDP is going to be released. Now we're going to go look at euro currency. In the euro currency, traders, staying within a very smart parallel channel, runs from it when it hits the top, bounces off it at the bottom, bounces off it at the bottom, runs from it at the top, runs from it at the top, runs from it and never even bounces off the bottom, and here we are today. GDP comes out tomorrow. Will this simply be another higher low? Because you got a low and then a higher low and then a higher low. Will this simply be another higher low to go with all these higher highs? I think it will be. I think this setup's becoming clear. And I have one more bit of indicators to show you, and then I'll let you all go home because I know this has been a long segment. But I wanted to show you that there is a technical case for the GDP reversal setup. Let's look at indicators now on the euro. Okay, traders, euro currency commodity channel index, and the day before GDP has gone further than we've seen it in a while and right into the area that always makes it pop back up. Opposite the dollar was up here getting ready to come down. Now you see the indicators in the euro currency down here starting to point back up, and I believe there's one more chart back here to show you, and then I will finally be able to stop, maybe two, we'll see. Okay, traders, we are looking at the RSI, Relative Strength Index. Look what happens when you get to this blue line every time up here. Well, look what happens when you get to this blue line just about every time down here. Here we are now, right before GDP, at that blue line, which usually makes it go the other way. Traders, is there a case here? Mikey, do you see a case building here?
Absolutely.
Absolutely, right? I know I see one. Call me crazy. One more chart, traders, and then the chart segment is complete. Euro currency daily bar. Once again, this is the slow stochastics. Look where we are right now. GDP, baby. Right down here, slow stochastics. This is my case. This is what I wanted to present to you. This is my technical reason to think there's the good possibility that once GDP comes out, we start going the other way. Maybe into Friday. Maybe you need a knee-jerk down on Thursday, and then the turnaround Friday. But I'm thinking it'll probably start Thursday. Let's see what we get, traders. Pull your own charts. Draw your channels, look at your indicators, make sure that you think that this is going to be a turnaround if you even come close to considering getting long this market tomorrow. Do your homework. Please do not go off of the scenario I showed you, because I have been around long enough to know we can easily break down through here and continue on lower. So don't do this blindly. Do your homework first. I hope this helps you present your own case. So, have you seen all those charts? I mean, come on, traders. There is a case there, no doubt. That case is GDP reversal setup. I mean, come on. The indices and the currencies all showing you that look that they've gone too far in one direction, and their indicators agree right before the GDP comes out. I am not buying this downside, this new crash coming. This is not going to happen. And you know what, traders? If it does, so be it. I'll become a bear just like that. So listen, I'm not using my opinion. I showed you a valid technical argument for this market holding. If in fact it holds, I'll continue doing my buying of dips. If all of this breaks through, well then, hey, time for Oscar to start selling rallies. So what I will be doing is not trading, at least until the market shows me sometime tomorrow what is going on here. I'm going to take tonight off, tomorrow morning, and let's see if this setup is what it is. Because if I'm right, we'll have plenty of time this week and next week to catch the up move that's going to start. If I'm wrong, it's time for us to catch a spot to get short and take an elevator ride down. I don't want to be in it until the market tells me whether I'm right or wrong. I think the analysis is going to be right. I think fundamentals always come out in the charts first. And I think that's exactly what we're seeing. The setup in the charts is the fundamental, the GDP. This is a great test to see if this is going to be another one of our videos where we go, put the brakes on. Technicals tell us it's going the other way. I think that's what we're going to get. I hope that's what we get, but I will trade what it gives me, not what I hope for. So traders, do your homework. Get ready for 8:30 a.m. Eastern tomorrow morning on Thursday, and let's see if that is a setup. One last thing I will say about a video of this nature. Last one of these I did, I stood in my Omni camp, that video with the trading floor behind me, and I said, no way, this is a bond setup. These bonds, it's a whole big setup. And if you remember that video, I stood right in front of a brick wall and showed you just like this why the markets would turn. And the next day, that was a big turning point in the markets. And I remember doing that video, and it wasn't very long ago. This is another one of those types of videos where I stand on my technicals and say, hey, I don't care what the world thinks. The technicals say this thing's about to slow down and start to go back the other way, either Thursday or Friday. So there is my case, traders. I hope it's a strong one. I hope you can come up with your own analysis to either verify or debunk what I just showed you. In any event, come on down to www.livewithoscar.com. Jump into the free chat rooms. Grab yourselves a free membership, traders. It costs you nothing to come in. And that lesson I just did here on the board, I did that very same lesson today for my Omniacs at the site. That's a free lesson, traders. Come on down. Don't be shy. No one will bite you there. All right, traders, give me a buzz anytime, day or night, 702-629-4755. And as always, keep your emotions out of trading and keep your stops in. One of the best ways you can keep yourself unemotional or keep your emotions out of trading is to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.